Morning all. Sorry, having terminal trouble this morning, as usual. MT4 didn't want to open this morning for some reason. It's unusual for MT4 to be the one that doesn't work, isn't it? But today, MT4 decided to go a little bit mad. I think it's something to do with this indicator that I'm building at the moment on MT5 is sucking all my resources. So I'm building this indicator at the moment for the currency strength. So obviously our currency strength system on the website, I'm building an indicator to indicate currency strength, obviously. So it basically uses the same mechanisms that I use on the website for currency strength. So you can obviously look at things like the CAD. New Zealand dollar CAD at the moment is a good mean reversion opportunity because of the speed down. So it's probably going to pop back up again. So just building an indicator to try and plot that properly and test it. But anyway, I'm back now. And MT4 is working. ORBs this morning, we're not off yet. So there's the DAX. We're gap up situation on the DAX this morning. We've gapped up into what looks like a resistance I've drawn on the chart. So this is previous level here that we tested again on Wednesday and Tuesday last week. So that's last week's high, basically, which was the previous week's high. And that's where we've opened. So if we crack that today, break to the upside, we've got a gap fill here. And then this propulsion move where Trump decided to put those 100% tariffs on, which weren't 100% tariffs. You know, the usual, hey, everybody sell the stock market. You all made millions. Brilliant. I'll pop it back up again. So we got these two targets, basically, if we break to the upside today. So those are what we should be watching. If we have a look at where they are. So that's that gap fill. And then obviously Trump's big silly move. So there's your upside targets potentially today. Downside obviously is gap fill. And then low from Thursday. So we'll see where we go today. So 5-minute range is in. There's plenty of room for the gap today, 92 points, so loads of room to the downside. So if we do get that nice breakdown today, it should be a decent leg, basically. Hopefully. We will see. Right, so morning, everybody. I haven't said morning to anybody. How are Danny, Mumo, Ladder, Marco, Viserba, Manoi. There's lots of new names in it today. Yotko, how we doing? Please read released ORB 3.4. Just a bug fix. Don't need to know about it. Don't worry. It fixes a bug. Well, it doesn't fix a bug, actually. 3.4 fixes a licensing issue. It's not even a licensing issue. I had one customer who had a French name with a inflection above a letter. And on his particular broker he was using, that stopped outbound HTML calls. Complicated technical stuff, but it's literally a situation to fix one instance of one thing that might happen on one individual broker. So it's not anything you don't need to download and update. Don't worry about it. Unless you've got a French name or a name that has inflections above it in your account on your terminal, and you are trading with specific prop firms who are non-English language prop firms, you won't have a problem. So ignore it. It's not even a bug at my end. It's just I'm basically circumventing prop firm stupidity. Anyway, morning, Baggy. Luckily, Johan, switch back to MT4 from MT5. And I'm still trading. Everything's on MT5. I'm just using MT4 for charting because it's 1,000 times faster. Yeah, it's much easier to do this on stream than it is to use MT5 because MT5 is so slow. So, yes. Okay, 1 bar range is in. It's too small. So there is the 1 bar range break on, but it's small. Let's see what gold's up to today. No movement on gold either. Afternoon, ladies, or morning all. It's Vitali. YouTube is showing usernames now. I know, it's very annoying, isn't it? So basically, just to update you, obviously, if you're trading ORB this afternoon on stock indices, the times on your broker chart are still the same. Well, on mine, I should say. On my broker chart, the times are still the same. We are still UTC +2, so it's 8 o'clock in the morning here. My chart for the Dow is showing at 10 a.m. However, clocks have changed in the UK and Europe. Therefore, the New York Open is not 2:30 in the afternoon now. It is 1:30 in the afternoon. Okay? 1:30. Okay? So, which means that in your indicator settings for this week and next week only, you need to change this. And it becomes this annoying thing we do every year, where instead of being 16:43, it's 16:35, it's 15:35. Okay, so make sure on your VPS or your terminal or whatever you're doing, you change all these inputs forward 1 hour, because the market opens an hour earlier for us now in the UK, only for a couple of weeks. In America, we'll put theirs forward in a couple of weeks, or back, whatever, back in it, and then we will go back to normal. Yeah, so it's this stupid time thing, which a history teacher who I was speaking to at the weekend informed me is all to do with Scotland, apparently, why we changed the clocks. Because in Scotland at the top, they didn't get enough light. So we thought we'll change the entire clocks around the entire world because people in the north of Scotland couldn't get up in the morning. Apparently so. I don't know whether it's true or not, but he is a history teacher, so I have to go with what he says. Anyway, so whether or not it's actually true, I don't know. Anyway, but we've got gap opportunities on US indices as well. So just be aware of the Globex session today. You never know. It might grind down. I don't think it'll get that far, but we'll see where it goes. Right, news this week. So obviously this annoyance, but nothing you can do about it. New Zealand bank holiday today. So today, news-wise, we've had Bullock speaking this morning. If you look at ADRs, there's nothing on ADR today at the moment. So ADRs are flat. AWRs obviously are flat 'cause it's Monday, but there's nothing there. So no movement basically overnight much. We have got gap situations in play though. So if you look here, the Euro Swiss, what? That's not a gap. Why is that up there? That's weird. That chart is just that chart hasn't updated. Where's all my data gone? It's like saying about MT4 having a bit of a problem this morning. It's having a funny 5 minutes, isn't it? We'll work on the hourly charts. But yeah, so there's a bit of movement today, but obviously nothing's hit ADR. If you look at the Aussie Swiss here, we've got a fair old gap up on the Australian pairs. We quite often get it on the Aussies. So there is gap fill opportunities on the Aussie pairs, which are kind of working out at the moment. But no news really today. We've got German IFO at 9. Tomorrow we've got nothing. It's Richmond and consumer confidence. Wednesday's when it all starts to kick off this week. So we've got the Australian CPI coming out. We are forecasting quite a big increase in CPI, I have to say. 0.4 increase, which is well above the normal differentials. Normal differentials are 0.1. A 0.4 increase gives us quite a bit of wiggle room, basically. So we might get a decent... Actually, it's not actually true, is it? Because we do get... There's a 0.7 and a 0.6 differential there. So it's not actually that uncommon to get a forecast that's 0.4 off. But anyway... that is what we've got coming up. So we might see some decent movement there on the Australian dollar. So if you've got any Aussie positions you're holding overnight, just be aware that they will change Wednesday morning. So there's your CPI forecast. We're expecting everything to go up, which is going to be bullish Australian dollar if we get them. So if you are short Australian dollar pairs at the moment, which I know a few people are, you're going to want that to come out lower than 1.1 and lower than 3.1. So if you get a 3 or somewhere close to that 0.7, that's going to be bearish. If you get a negative, i.e. we go to a 2.9 and a 0.6, for example, that Aussie is going to come down by more than an ADR very, very quick. So be aware of that. New Zealand dollar, we got talking head. Then we go into Canada monetary policy. report and obviously the interest rates. Canada are dropping interest rates this week, 2.25. So it's this gradual decline that we're seeing, obviously, on interest rates. Target is 2. As you can see, they very, very rarely, if ever, deviate from plan. Yeah, we do not get deviation from forecasts from Canada very often. It's very, very rare. So expect that 2.25. That is bearish Canadian dollar. However, because we are approaching the target of 2%, it may be that the market doesn't react because the likelihood is we're going to stabilize here. Obviously, things aren't going great in Canada at the moment because of the Trump tariffs. Obviously, he threw his toys out the pram last week because of an advert that the governor of Ontario decided to do, which was a Ronald Reagan advert from years and years and years ago, obviously. And basically, Trump took it as a personal insult and cancelled everything. So, yeah, put a baby in charge of your country and you will get stupid decisions. But anyway, so that's not going to help Canada. So I can't see much more than that for Canada at the moment, but it might plateau. So we'll see what the monetary policy report says. There may be some indication of dropping to 2% in there. If there is, we might see some negative movement on the CAD. The press conference at 2:30, that's when we're going to get forward guidance. So obviously, that's what you want to be paying attention to. Then we have at 6 o'clock, not 7 as usual, at 6 this time, the US dropping their rates down to 4%. So again, very unlikely that we will get any deviation from forecast. We don't get deviation from forecast very often. We did get one there, which was obviously bigger than expected, but it's very rare for the Fed to change their mind. So we'll see what happens there, but I'm not expecting a massive move off of this. The market is just negative. Dollar has been for a long time. So I'm not expecting really anything much, if anything, than a drop in a dollar. So CAD and dollar Wednesday, potentially big moves ahead. We've then got the Japan rate, which is not changing again. Quite surprised they've held it for such a long time. So we're now sitting on, what's this, 8 months? No, 6, 7, 8, 9. Yeah, so we're sitting on 9/10 months worth of stable 0.5 interest rates. We were kind of expecting, I think, the market for a gradual, increase. You want to get yourself up above 1%, basically, so that you're playing with the rest of the world. But they haven't. They've stuck themselves at 0.5. So they're trying to be a bit more Swiss franc-like. But again, usual for Japan to stay stable. These ones here, which were very bullish, this was them changing their mind from negative to 20 years worth of negative interest rates. Suddenly overnight they went, actually, we're not going to do this anymore. So that was that one. And then we had one more unexpected where they started going into 0.25% increments, which is falling in line with the rest of the world. And that's where we've been ever since. So I'm not expecting a change on that, but you never know. So be aware of that. You might get some serious movement on the yen on Thursday morning. We got GDP coming up for the US, and we've then got the euro rates at 2.15. No forecast for change on euro. Don't think Lagarde will do anything, and she probably will say we're going to carry on at 2.15. This is pretty much target for them. They're quite happy staying there. They could stay there forever as long as CPI remains stable. There's absolutely no reason to change that, which means you've got a neutral, slightly bearish outlook on the euro. But no reason to change that. And then obviously we go into Friday. So Friday's news releases, we got PCE coming out. There's other news. I think if you look on Forex Factory, there is other news. So they've got, here you go. So we got GDP as tentative. That will happen. But this one is tentative, the GDP. And the PCE and unemployment, because obviously of the shutdown that we've got at the moment. So it's obviously very hit and miss with US news at the minute. So these may or may not happen on Friday. But as you can see, this week is interest rate week. It is absolutely huge week. Yeah. So we've got, how many have we got this week? So we've got 1 inflation, 1, 2, 3, 4 interest rates. 4 interest rates in 1 week. So if there's any shocks on any of those, the market is going to have to reposition its portfolios, and we're going to get stupid movements all over the place. So there's potential for massive moves this week, but obviously there is just potential for us to do exactly what we thought we were going to do and carry on as normal. So just be aware it's a very, very high volatility week this week. Right, let's see where we're going with the DAX. DAX breaks short, so we are going for the gap fill. Partial on the 15-minute ORB. Sorry, the 10-minute ORB, which is what we've got today, is just shy of the partial line, which is 2R. So gap fill in play. So if we are going to continue to break short, you really want to be watching this area for a reaction. But if we, this DAX is not able to get through this resistance, is it? So we've got this area here on the DAX, which we are, we're not getting through it. So there's potential for us to go into rotation and stay either within the intermediate range, which is 125 ADR, or the low of the last 2 weeks, which is about 225 ADR. So that's your potential movement to downside this week. Obviously, we've got a million things that can move all the stock markets this week. So there's no point in trying to forecast where you're going, because it's going to go where the market takes it today, isn't it? Gold, no trades on gold. 3-bar range is too tight. 4-bar range is, the 6-bar range is likely to be too tight as well. So I don't think there'll be any trades on gold today, but we'll see. Right, there we go. So there's your news covered. ADRs, there aren't any. RSI extensions, there's a few which we'll have a look through. Just catch up on the chat. Shifts from 16 to 17, you put 15. Shifts from 16 to 17, you put 15. Does it? We went back an hour. Oh, God. My brain's not with it this morning to calculate that. No, you go forward one. Do you not? Why have I not got my... I had an offset set. Anyway, I'm I'm one of those people who adjusts it when I get there. So what I will do is at 1:30 this afternoon, or at 1 o'clock this afternoon, I will go, what time do I need to set my thing to? And I'll change it. But you might be right. I can't remember. I hate this thing when it does this. It's just so annoying. It's to help school children walking to school. Don't think they really cared about school children when they started changing it, did they? 1 week only. The US changes the next... Is it next Sunday, is it they change? Yeah, it might be. I don't know. I just go with the flow, basically. Yeah, it's next Sunday. So, yeah, we just get the 1 week. So it's just this week we change the ORBs, and then we change them back next week. So it's... I think it's in the summer we get 2 weeks, don't we? Or something. I don't know. I can never remember. It's just one of those things that it just happens. It screws up all your back tests as well, which is why I don't bother with it. So in back testing, theoretically in back testing, what you should do when you're back testing any type of stock index strategy that is time related, or any time related strategy at all, is you need to, when daylight savings time shifts, stop your test, change all the inputs, and retest again, and then get back to the next time zone shift. I can't be bothered. I'd rather go, there's 52 weeks in the year. Do you know what? 2 weeks of the year, I'm going to get shit data. Don't care. As long as overall the P&L goes up, I'm not really that bothered. But anyway. Right, so we'll look at these RSI extensions. Your Scottish children were going to school in the dark, so move the clocks, and now they come home in the dark. This is true, isn't it? Yeah, I heard it was to do with people lighting, like in the Victorian times when they lit the gas lanterns in the streets, something to do with that. I heard it was to do with postmen to give them a nicer experience. I heard it was a mathematical thing to make sure that the rotation of the Earth and time is consistent. But many people have proven that if you didn't change the clocks, actually everything would line up perfectly and we'd have 13 months a year. I don't know what it is, but what I do know is it's pointless. We don't need to do it anymore. We live in a civilization where we just do not need to change clocks. Maybe it's to help the people in Iceland who have like 12, 6 months worth of darkness a year and 6 months worth of light a year, because basically if they change their clocks, they'd have an extra couple of days of light or a couple of days of dark. I don't know. I don't care. I just wish we'd stop doing it because it just bugs me from a trader's perspective. Twice a year, I have to screw all my EAs up. Anyway, Aussie dollar yen extended on the 4 hour. There's a couple of good extensions at the moment. So Aussie yen is out the highs on the 4, above the 20, above the 80 rather. So again, really nice push up and mean reversion opportunity. We had a good solid week and a half of movement, which basically we're looking for a profit take leg on. The Japanese yen, obviously, everything you see this week, looking at forecasts and things, obviously will or won't happen depending on the news this week. So, you know, Japanese might come out and say, do you know what, we're not going to go with a 0.5, we're going to go with a 0.75. And all of a sudden that yen is going to go through the roof, which means everything's going to collapse against the yen. But potentially, if this new low that we put in here is part of a market structure break to the downside, obviously, this is where you would start looking for a 61.8 retracement short. So, yeah, potentially, this is a good short area. Obviously, it could be that we're looking at some weird market structure long here. But the Aussie dollar has got interest rates this week. The yen has got, the Aussie dollar's got CPI this week. Or is it interest rates? Can't remember which it is. CPI this week. So, obviously, we've got two potential moving news events this week for this pair particularly. So drop in CPI and an increase in Japanese interest rates, you're going to be below that by the end of this week, aren't you? So potentially, don't think you quite get down there, but you'll be on your way. So good extension there on the Aussie yen. All the yen pairs are in the same boat if you look. So we've got CAD yen, Swiss yen, Euro yen, and New Zealand yen. So they are all very extended to the upside. We've got nice divergence going in at the moment on the CAD yen, and we're up at resistance highs, and they're dropping interest rates. This looks like a lovely short up here. Just bear in mind, it's going to cost you if it goes the other way. So that's a really good looking short. The Swiss yen as well, very, very, very extended with a gap fill to do to the downside as well. So this is getting a little bit parabolic now. We've got this gap up here. There's a lovely reversal alert just about to go in off the last week's high on the 4 hour chart there. So nicely extended up the top at the moment. You've got a double top just gone in this morning from last week's high. And it's sort of stalling out, isn't it? So nice big strong push to the downside. That reversal alert's going to go in. We've got 1.5 hours left on this 4 hour candle, but if this closes bearish below that low, that's your reversal alert. So it's the first reversal alert you have had since going back here. In fact, you didn't get one there either. So that was your last reversal alert 2 weeks ago on the 4 hour chart. So this is your last reversal, your first reversal for 2 weeks, Swiss yen. So that's a really good looking opportunity for shorts there. Massively extended. That. Think gold. What's just happened to gold? Yeah. Definitely due, isn't it? And the gap fill. Market doesn't like gaps. So you've got a kind of 6 ADR move to the downside potentially on the cards there. So nice looking opportunity there. Euro yen extended. So both of these are the same pair. Don't trade both. Euro yen and the Swiss yen are the same thing. Just trade one or the other. So they're obviously going to be extended. This one's extended more than the Swiss yen. We have just managed to get out of that 2 week high look. But obviously we closed last week at the highs, so this obviously is just a gap up. So if we are going to stall and the target is going to be to fill that gap, which typically it will be within the next few weeks, you may well see us starting to just go into a range to get back down to here. So that's a really good looking short. It's more expensive to short that than the Swiss, I think. When it ticks. Tick. Thank you. Actually, no, yes, sure. So yeah, Swiss yen is cheaper. But yeah, both good. Pound odd is also your other extension. Actually, let's do the New Zealand yen first. So New Zealand yen obviously is the same as the Aussie yen. So trade one or the other. Those are both the same thing, both extended, both below the high of the previous. Yeah, so it's the same thing. And you've got pound odd as well as an extension to the downside. So there's a potential here for the pound running against the Australian dollar on the Australian news being negative this week. So this is this propulsion move, which we've come and tested a couple of times. We've broken through that now. So personally, I think I'd be much more happy taking a long back down here. So getting this nicely extended back down below that sort of 20 level. But you can see the market structure very clear on this. We had this triple top high put in, and then we made this nice range here, high again, and that's where we broke down. So your market structure there shifted to a lower high, lower low, lower high, potentially lower low. So that is going to require strength in the Australian dollar. All the forecasts are for increase Australian dollar strength, but we don't necessarily know if we're going to get it. There's no news on the pound this week that's of any impact at all. So very difficult one here, but obviously if you're going to get into that as an initial entry, be prepared for that low to get taken out and watch these previous sort of resistance levels here, 225 ADR. So you'd be getting in here on the assumption that we're going to push back up, or if it breaks that low, you'd be taking a second, third, fourth, potentially fifth, then bouncing out on that leg. So you'd be taking that as profit. But yeah, nice extended for a first entry. Nothing else on the hourlies. There we go. So this week we are today in the academy. We are doing the final stage, the final lesson in prop. So we're doing the CFDs. So what's wrong one? So we've done futures strategies and the different types basically. So what we're doing, and multi-currency approach, we've done everything on it basically. So this is the final lesson in prop this week today, which is this one here. So we're doing that this morning at 9 o'clock in half an hour. And then we're going on to the final strategy module, if you like. So we've done obviously the 101s, we've done the economic news scalping, we've done the prop, and now we're going on to position trading bootcamp. So with the position trading bootcamp, I've got these four kind of precursor lessons, as I call them, basically. So these are kind of the fundamentals lessons, which I've got to record, and I haven't recorded yet. So I'm going to try and get some of this done today and tomorrow. So assuming I can get these all nailed by Wednesday, the plan is this week for members is we're going to start with this lesson on Wednesday morning, which means you're going to need to have whizzed through these ideally. But the position trading bootcamp is split into all these basically lessons within the module. But these are kind of your precursors. So just the basics of what position trading is, what you eliminate as a position trader from trading, which is what 90% of traders fail. This is why position trading works for most people, because everything you do wrong in trading is eliminated by position trading strategies. So, and then the three key rules for position trading and elastic band theory. So all of these 4 videos, basically, which shouldn't be more than an hour's worth in total, set up the position trading bootcamp, the new version, which we start on Wednesday. And that will last for 2 weeks. So it'll be all of this week and all of next week. And then hopefully we'll have most of that done. And then we're going to be off into backtesting and strategy development. And then it's all done. We're done. The entire lot, which is brilliant. So it's taken a hell of a lot longer than I anticipated. What are we in? 14, 15, 16. So it's 15, 16, 17. 22. By the time we've finished all of this, I reckon we'll be sort of up to about 30 hours worth of education in there. And that's pretty much it. That's all you need to know. And then obviously the extras. So that's what we're doing this week. So position trading bootcamp. I haven't set the live calendar up properly yet. So I haven't actually put the lessons in there because I need to make sure I've got those precursor lessons done first. So that's what why it's a little bit sparse at the moment with what lessons are being covered. But that's what we're doing. Right. DAX is on its way to the gap. So just watch the close. Might be worth taking a partial at the close, but we'll see. See what happens when we get there. 1 week only, the US changes. Yes. And we covered the Scottish children. There we go. All caught up on chat. If anybody's got any other pairs they want to look at. Oh, there's a pair I need to look at. Sorry. Who was it? Michael. Swiss yen. We have covered Swiss yen, but I will cover it. So can you look at the Swiss yen on Monday? 6 positions short, 1% drawdown. We'll start doing DD control when I'm at 7 positions. So you are 6 positions. That's definitely going to give you a reversal alert. Well, it's not. I mean, we've got 1.5 hours, but that's looking like it's giving a reversal alert, doesn't it? Yeah. So basically with this one, obviously, because of where we are out in all-time highs, there's no resistance to look at. We kind of discussed this in Discord. There's no resistance to look at there. So all you can really do is look at, I think we talked about potential Fibonacci ratios and pivot points. So when you're looking at a move like that, for example, yeah, you got your pivots, Fibonacci extensions. There's a 127 extension as well. But all you can really do with this type of thing when you're looking for aggressive drawdown control, hopefully you won't need it because it looks like this is going to come down and do the gap anyway. But is just, taking levels. So if you get ADR extensions, try one at ADR. Try those sorts of levels. If you look at lower time frames as well, the other thing you can do for aggressive drawdown control is look at lower time frame RSI extensions. So, if we suddenly pop up above the 80 level, you're likely to get a pullback off of it. That's not really a massive move, but it's enough to get you into an aggressive drawdown control position. And if that is the one that gives you the market structure break, that's good. So watch lower time frame RSI extensions as well. But that's you got a reverse alert on the hourly there already. Look. So you had a reversal alert. Yeah, you didn't get one on Friday. You didn't get one on Thursday. So you had one there the week before. So you haven't had one for 3 days. So, this could be it. We've got the thing you've got to bear in mind is markets move in cycles. Banks and institutions move in cycles. So they will have continuous moves which will have profit takes on them. The profit takes will come at points where they need or feel it's right to take profit. So this week is a great example. We've got 4 interest rate decisions. If you are an institutional trader sitting in X% of profit right now, and you've got 4 interest rate decisions and an inflation decision coming out this week, on the pairs that you are in, or on the symbols and instruments or the portfolios that you're in, there is a possibility that that X% of profit is going to disappear very quickly. So you could either take that, buy a new Ferrari and get a raise, or you could take a chance that it all goes your way. What would you do? Guarantee a Ferrari, a raise and a promotion with your boss, or take a punt? Yeah. So this type of week where you've got all these interest rates coming out is not unusual to see the move unwind. As soon as that profit take move unwinds and they see that high, broken at 125 ADR, you'll start that cascade effect, and that's where we're headed. So, gaps don't last long. So this, I think, is potentially the week that you're going to see it. So I don't think you'd need to take another trade on this, to be honest. I don't think you'll need another position on it. I think you'll be able to get out. So if you've got 6 positions on, and let's say you're 3/4 of an ADR apart, you probably got in here, didn't you? I would say, maybe. So your average is going to be about 225 ADR. So if we can test the low here, which you will probably get a bounce at, that's a nice profit. But I reckon you'll probably only need to get to that last week's high. Sorry, 2-week high. That's your 2-week high there. But yeah, there's nothing to look at from a support resistance perspective on it. There we go. Hopefully you're watching the replay. That was helpful. Pound CAD. Not really going anywhere, is it? So weakness in the Canadian dollar this week, in all likelihood, with the interest rate drop. The market structures kind of slightly long in an elongated banana-y type way, but it is bullish. Yeah. So there's no reason why it shouldn't remain bullish. Canadian dollar, no reason why that should get suddenly bullish. Unless Trump turns around and goes, do you know what, Canada, we love you. Let's buy all your timber and lumber at 150% of what you want for it. Yeah. So let's all be friends again. Unlikely, isn't it? So yeah, watch this propulsion we're in right now. There's no extension on it. There was a signal to go long last week, which obviously went straight into propulsion and bounced back out again. So yeah, you've got divergence on the RSI on the hourly. Look, making new lower lows. We're making higher highs on RSI. Bullish divergence. Bullish propulsion gap, bullish market structure. Give you 3 guesses what I would rather be. I opened there today, the second long. Yeah, you plenty. If you've only opened a second long today, which is a bit tight, if you took an entry here, I suppose that's maybe not. What's half an ADR is 48, isn't it? All right. So yeah, watch that. And then you're looking at this propulsion gap to the downside potentially. If we break structure, so if we break structure to the downside here, yeah, we're now suddenly going a little bit bearish. Watching for a bounce out of there or a bounce out of there on that leg. Have you been triggered into a long on the FTSE? I'm not trading the FTSE. Is your latest ORB available on the marketplace? No, only via the website. I don't sell on the marketplace anymore. I'm not doing anything with the marketplace. It's utter crap. It doesn't work. It just doesn't work. So many people contact me saying they cannot buy on it. I go to the marketplace every now and again, right? Whoops. And it just doesn't work, right? So you go to the marketplace and basically it will come up with a 504 error or something. There'll be an error on the marketplace. They don't accept PayPal anymore. Yeah. They've got lots of sanctions on them. They can't accept PayPal. There's certain banks that can't you can't use anymore. So you can't use a load of bank accounts now. There's lots of bank cards that you cannot use. I cannot withdraw any of my funds onto my business bank account that I have because they won't transact with MQL5. Yeah. It's shot. It doesn't work. Yeah, it does work. Some people can buy on it. But I've had people saying that I've tried 3 different cards. I've tried my personal card. I've tried my credit card. I've tried my business banking card. None of them work. Can you take crypto? Yeah, they can't even take crypto. So as far as I'm concerned, it's dead. I used to sell everything through here, and I used to sell a lot. And I have more people now saying they can't buy on it than do. So I'm sorry, but until they fix their problems, I'm not interested. It's full of shit as well. Look, I mean, look at all this crap. It's just bollocks. The whole lot of it's bollocks. It's just full of shit. That's good. Shit. It's all shit. Everything you see that's called the Reaper, the Mad Turtle, Quantum Queen, Aura Ultimate, Quantum King, Remstone, bollocks. None of it is working. It's all just all these adverts you see all over Facebook with all these lovely curve fit equity lines. You know, it's just full of shit. What they do is they update them regularly. So they constantly update them with new set files. So there we go. So important. After purchase, please send me a private message to receive the installation manual and setup instructions. I will send you the latest set file, which is curve fit to last week, so that when you test it, it's guaranteed to give you a positive equity curve. That's what they do. All of them. You watch every single one of these you go on. Yeah. It will have, get in touch with me. Get in touch with me. And all this like discounted price. It's going to increase by £50 every 10 purchases up to 5,000. No, it's not. It's not. This is the 11th of July you launched this thing. It's not going to go up by 50. It's all bullshit. Total bullshit. The whole fucking lot of it. But it's just, yeah. I'm really just not. I'm over it. I'm over it. I'm over it. Public channel with live signals. Let's see. 3 weeks, 4 weeks. Oh, hang on. It's gone. Oh, hang on. We had to take it down from here and put it up on my FX book because it blew the account. It's just yeah, nah, not interested anymore. So yeah, sorry, I'm selling direct. All my stuff is on my website, and that's where it's staying. Or just sign up as an elite member on here, and you get them all. You get every single EA. 5 licenses for every EA on MT4 and MT5. You get the lot. Do that. All right, see where we're going with the DAX. Pulling back on the DAX, a bit stuck today, isn't it? Nice rejection again there. Might be a bit of a grindy one today. So we have just run into that resistance from Friday's New York session. So this is the New York Open on Friday. We pushed straight up and we're bouncing straight out of that high. Obviously, we didn't go anywhere Friday. Friday was a bit of a dud with everything. Manoy, I'm dying laughing. You should have that bollocks impression as your sound when someone subscribes or does a super chat. It's a load of bollocks. It is, though. It is just full of crap. I've known this for many, many years, and I've been trading 20 years, yeah, and I've been using MT4 for pretty much that amount of time. I've been trading on MT4, MT5 for a good 15 years. And I've seen this same systems and strategies come and go 100 times with different names And the scam is the same every single time. They set up a signal with a curve fit strategy. It gets to a point where it blows the account. They remove the signal. The EA dies. They put another one up. They call it something else. They redevelop the website. They give it a new equity curve. Rinse, repeat, rinse, repeat. And the thing, an unfortunate thing with trading is you have this cycle of new traders who know nothing about anything coming in, seeing all of this, buying it, and then getting wise and going away. And it's just this never-ending cycle and wave of the same thing happening over and over again. As long as there are new people being born on the planet, there will be new people that want to make money. These new people that find trading and they fall for all of this crap and buy it. And this is why they put these prices on here, to fool you into thinking it must be good. Really? If it's that much, it must be good. Why is it so expensive? I don't want very many people buying it. It's just utter nonsense, the whole lot. You know, this is just so much crap. But it's been like this forever. It's been like this forever. It's just always done this. You know, it's just nothing you can do about it, though. I mean, but this is the problem. This is why MQL5 has always been so successful, because they make the vast majority of their money out the marketplace. These people selling these things, they're not sold at these prices most of the time. You know, they don't, as Bogdan, he's been around for forever. But, you know, these reviews, yeah, the only way you get the latest set files is to leave a positive review. That's how it works. Yeah. You buy something, he goes, give us a positive review and I will give you X. And they'll also give you a load of extra EAs as well. So a lot of these guys will find EAs out there and they'll just go, sign up, give me a positive review and I'll give you 10 EAs for free. They're all crap, but 10 EAs for free? He's amazing. He gives me loads of stuff for free. 5-star review. 3 weeks later, my account's blown. Oh, well. It's just great, isn't it? I've tried, I mean, if you download any of these, right, and it's the same with all EAs, yeah, you download any of these and stick them in a strategy tester, none of them do anything that is actually profitable unless you buy it, unless you contact them, unless you get the set files. But it's all these viral promotions on YouTube and stuff. Yeah, this is an ORB master. I downloaded this one, actually, because I wanted to see what it did. It certainly doesn't do that. I can assure you of that. But if I contact him and say, why is my equity curve not like that? Are you using the wrong set file? Oh, am I? Which is the one I need curve fit to the last 2 weeks of price action then? This one. Oh, okay, now it looks like yours. People don't know, though, do they? They don't know about robustness testing. They don't know how to back test. They don't know about equity curves should have massive drawdown in them, because it's the only way you're ever going to make money is by taking drawdown. That's why we position trade. DAX is rejecting. So hopefully that's the last rejection at the highs. They've just taken out a load of longs in propulsion. Look, there's your propulsion gap short. We've just added more shorts in. So fingers crossed that'll be the start of the next leg down. Right, it's 10:02. I've got to go. So I'll be back on Wednesday afternoon for the next live stream on YouTube. That is for 1:30, not 2:30 now. We're 1:30 for the New York session. And we'll basically, Wednesday, we've got the member stream at 9 o'clock. So that should be the first part of the position trading bootcamp version 2. So that's what we'll be covering this week. Okay. So if you're in the members streams, obviously we're starting in 10 minutes. We're just going to finish off, which isn't scheduled, is it? We're going to finish off the CFD part of the prop side of things. So we're doing strategies to use on prop. Why is the date wrong? Clocks. This is why we shouldn't change clocks. Yeah. Anyway, so yeah. Why no longer trade the FTSE? I just don't want to. It's just I've got to change broker. I have to have multiple brokers open, so I just didn't really want to. There's no the FTSE's always been not quite as good from a performance perspective. So yeah, just dumped it. But nothing wrong with it. I mean, it works sometimes and sometimes it doesn't. But the vast majority of the profit's going to come from US indices. So, but yeah, trade it if you want to. It doesn't matter. Everything opens. Everything either at the open, it either goes or it doesn't. Yeah. Yeah. So sometimes the FTSE goes, sometimes the FTSE doesn't. But usually when the FTSE goes, the DAX goes. And when the DAX doesn't go, the FTSE doesn't go. Sometimes one goes and the other doesn't go. But to me, I just, because I've got to, I like trading on one broker ideally at the moment, which is Robo Forex, and they don't have the FTSE. So I have to trade on Global Prime or one of the other brokers for FTSE. And the problem with FTSE as well is, for me personally, the spread is just a bit too high on the FTSE. So I found sometimes I was getting triggered into trades which just had spread triggers. The DAX is a lot tighter. So if you look at the spread on the DAX, yeah, you can hardly see it. There is no spread on the DAX. That's it. Yeah, the FTSE spread can be quite easily that. Yeah, so when you're talking about double bottoming here, you'll get spread into trades that aren't trades on the FTSE. And I can't be bothered to look for a broker that's got a tight FTSE spread just to trade the FTSE, to be honest. The difference is not enough. So. Anyway, so members, back in 10 minutes, and we will cover the strategies used on prop for CFDs. So that finishes off the prop module. Yeah, and then I'm back on Wednesday, all right? So have a good day. Anything you need, let me know. I'll be in Discord or Telegram. Other than that, I'll see you guys Wednesday.